Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 12th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. One or two of the majors making some modest gains back against the US dollar, the euro, the pound sterling against the dollar, and most notably the Australian dollar, which is up by around 0.29% overnight against the US currency after a week, last week, of significant downside moves. But we have seen dollar gains elsewhere. The dollar was on the front foot against both the Canadian dollar and the Mexican peso, as you can see here. And most impressively of all, once again against the Brazilian real, where it took a further 0.77% off of the Brazilian currency, bringing its weekly gains, or gains over the last 7 days if you prefer, to around 2.43%. Dollar index for its part trading back above 97.05 shortly before we recorded the video. Just off the session highs, but nonetheless on the front foot once more. The question I'd like to ask is how much higher can the dollar push on? There doesn't seem to be a great deal of resistance in its way at the moment, and you can see weekly gains here of over 1% for dollar index. Okay then, what's on the calendar? Events that may move the markets today. Pretty light once more as far as major data is concerned. We've got that ongoing meeting of the Eurogroup ministers as the finance ministers chance to get together today. We've already had some home loans data first thing this morning out of Australia. We'll look at that in a bit more detail momentarily. And the rest of the day really is taken up with central banker speeches. At 8 a.m. GMT will kick off with a speech from German Bundesbank President Jens Wiedmann. He, of course, is back in the frame for Mario Draghi's position when Mr. Draghi retires at the end of this year. So it'll be interesting to hear what he's got to say on that basis. Governor Mark Carney of the Bank of England will speak at 1300 GMT. Whether Mr. Carney's got anything further to say about Brexit remains to be seen. He vented his spleen pretty clearly last Thursday. And then at 17:45, the US Federal Reserve Chair Jay Powell will speak. Again, we're not expecting too much, if anything, in the way of policy comment here, but the market will be listening intently, just in case Mr. Powell provides any clues as to his thinking and that of the FOMC on rates. 23:30, Fed member Meister will be speaking alongside the ECB's Lautenschläger. So if you're a night owl and up, you can catch details of that. And at the same time, we'll have the Westpac consumer confidence data out of Australia for February. Business sentiment, business confidence improved in Australia overnight, or at least in January it did. Perhaps consumer confidence can follow suit. We'll have to wait and see. Okay then, breaking news and data, comment that's caught my eye. So, first of all, Australian business sentiment did improve in January, up from a reading of 3 to a reading of 4, so a welcome bounce. However, home loans data for December, which was also released yesterday, showed a sharp contraction of 6.1%, and that's the biggest dip in that metric since May 2015. Maybe that slowdown in loans for housing will be seen as a positive signal, cooling the housing market perchance, and that might help explain why the Aussie dollar's back on the front foot, but some difficult data there for the RBA to deal with. Meanwhile, Theresa May will update MPs today about her talks with Irish politicians over Brexit, the backstop and the Irish border, all three of which have been obstacles to the completion of a Brexit plan, and we may have a debate about that and any proposals she has in the coming days. In Spain, the trial of Catalonian leaders behind the 2017 push for Catalonian independence begins. However, former Catalonian PM Carles Puigdemont remains in exile in Belgium, and he won't be in attendance at the trial. And a deal that could avert another US government shutdown has been tentatively agreed in Congress, with the approval for a portion of the funding for border security requested by Donald Trump. Remember, he asked for $5.7 billion. Congress has penciled in a grant of $1.4 billion. Hopefully that will be enough to avert further US government shutdown, but we'll have to wait and see what the reaction from the White House is to that. Okay, food for thought, something to take away with you into the trading day and beyond. And why not think about this? The OECD, the Organisation for Economic Cooperation and Development, has flagged the likelihood of a continued slowdown in growth among the economies it tracks. Though the organisation's forecasts are often criticised by the market, they were among the first to highlight the Eurozone slowdown and did so well ahead of the authorities in Brussels and at the ECB. The chart on the right here shows the OECD composite leading indicators. You see here how they dipped sharply into negative territory, but below 100 in the recession of 2009. We're not in that territory yet, but we have dipped below the 100 level, and we are heading lower. Now, we just have to take some of this data with a slight pinch of salt because the US government shutdown. Some of the American data isn't in the piece, and the OECD admits that, and have extrapolated their own views on American growth. So keep an eye out for updates on that as and when the backlog of US data is released. Okay, it's risk warning time. Please take a moment to read the risk warning thoroughly. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly. Thank you for your time today.